All right, GM, everyone. Welcome to the Apyx weekly office hours. This is number 7 in the edition of this weekly series we do here. My name is Pete Humison, founding contributor here at Apyx. And we've got on the line today Parker White, founding contributor of Apyx as well. For those of you who know or may not know, this is a weekly spaces that we run where we present the opportunity for market participants, community members, prospective users to come on, ask questions, get their questions answered live. And we also try and do our best as well to just quickly recap some of the developments that Apex has seen throughout the week. So without further ado, we can jump into this week's spaces. Parker, how's it going? GM.
GM, how y'all doing? It's a good Friday.
It is a good Friday. And before I asked Parker how he's feeling this week and what stood out to him and what to make of all the crazy STRC developments, quick reminder, if you have a question, feel free to raise your hand. We'll bring you up on stage. You can ask, or alternatively, if your space is shy, don't hesitate to drop the question on our pinned tweet on our profile and we'll answer it. That said, Parker, my gosh, it's been a crazy week. Beautiful green Friday, Bitcoin, a number of other assets ripping higher. What are you kind of thinking? What do we make sense of the price action and kind of stretch and strategy on a run this week?
Jeez. I mean, I'm sure everyone who's any kind of stretch follower saw the numbers they put up late last week and early this week, record setting volume numbers, not just for a preferred stock, not just for Stretch itself, but I mean, they did what? Like 1.5 billion in volume on Tuesday and 1.2 billion on Monday. I mean, this is like Stretch is starting to break its way into common equity volume levels for like good size stocks. The level of turnover here relative to float is just, I mean, off the charts insane. And look, I mean, you look at where Bitcoin's trading at and, I don't know, the fearful hands, the paper hands, the lettuce hands dumped already. So the people left in the space are like, I mean, I don't know. I'm not selling my Bitcoin. I don't know really who is at these levels. And then you guys say they're coming in buying $1 billion a week. Like at some point, anybody who's short um is, they're gonna get their face ripped off if they don't cover quickly. Um so, the last bull market was kicked off really by Saylor just giga buying via the common. He's now got common and preferred to as instruments to giga buy. I've also seen some numbers showing or some historical charts showing the time since um, we last broke the all-time high. So basically it looks at um, you know, for example, when the price crossed 69, which was, the all-time high in 2021, when the price crossed 69, fast forward 23 months, and that's always been the bottom. We just passed that. And so I know, the bull market really came a lot earlier in this cycle. And so it might actually be the case that the bear market ends a lot earlier as well. So I don't know. I'm maybe getting a little hyped up and high on my own supply here, but um, you know, definitely excited seeing what's going on. I think a lot of people are waking up to what strategy's doing. And I don't know. I wouldn't really want to be short at these levels.
Man, it's wild to think about the next bull market starting. It does feel like the bear just started yesterday, but you know, there's, as you kind of allude to, there's a structural shift taking place for Bitcoin, and all bets are off. I guess we'll just have to see.
Yeah, I mean, look, even if, an Iran deal doesn't get done this weekend, I mean, oil certainly behaving like one is going to, but I think you're just kind of delaying the inevitable here. Like, I mean, if Saylor needs to increase the dividend by another 25 or 50 basis points, he can. Um, and like looking at the market, and we were in the market, obviously, Apyx bought 1 million shares of Stretch, $100 million worth. Like in the market trading, they could have sold a lot more. Like they could have sold potentially like 50 to 100% more. And so they actually showed restraint in issuing into the market, which is just insane. So even if, and I mean, that was earlier this week when Bitcoin, yeah, it was up a little bit, but not having the breakout that it is today. Like, even if the Iran war stays on and, we are staying in the doldrums for another month or two, like, I think he keeps putting up billion-dollar weeks, maybe 2 weeks out of the month is north of $1 billion. I think that creates a coiled spring scenario. I almost want the bear market to last longer because it allows him to buy more coins for every dollar that he puts in. And those are more coins that are just not coming back into the market for a very long time, if ever. Um, and at some point, somebody decides they want to get in, like there's no coins left to buy. So I know the quantum fudsters have been out there hard. But if you're afraid of quantum Bitcoin, I guess give me your Bitcoin. I'll be happy to take it. Sailor will be happy to take it. And you can buy it back from us at 21 million a coin.
Yeah. It almost feels like to me, anyone who's leaning too hard on that narrative will, inevitably bite them in the ass. But we'll see. I think Misk.eth raised his hand. I sent a request for him to come on up and speak. Misk, are you there by chance? I'll try sending it again. And again, for anyone else in the audience who might have a question, please raise your hand. Bring it on up.
There's one. Let's see. Ram asked 4 minutes ago in the thread. Apyx DAT thesis is an exciting long-term play, but I guess it also sounds like a heavy lift. Can you walk us through how far along the planning actually is? And is DFTV the assumed buyer for this, or is it or is it open to other entities down the line? What can I say? There's two hats being juggled here. So of course, I'll start maybe with the easy one. Of course, anyone is welcome to buy the governance token once it comes out. We don't control secondary trading of it. And just like, we launched on the DFDV side, we launched a sold that. We did not ask the foundation for permission. We didn't ask Anatoly for permission. We just did it. People can just do it. So, I think there's a compelling narrative here, right? There's only one publicly traded stablecoin on the NASDAQ, that's Circle. The second quote unquote pseudo publicly traded stablecoin, I mean, via a DAT, but like it is a stablecoin. That could be a really powerful narrative. So I could foresee a scenario where there's more than one Apyx DAT out there and some that we are, not really involved in. That being said, what can I say? It's not, let me just put it this way. We've done multiple DATs now. We launched on the, putting on my DFDV hat, we launched DFDV. We helped launch DFDV UK. We were involved in another DAT deal. And we kind of helped, make some introductions and help put the deal together a little bit. So we know how to do this. We've probably at this point launched more DATs than anyone else on the planet. Maybe the Nakamoto guys have helped launch a couple more, but we've done more than anybody. So in terms of doing a DAT, putting on our Apex hat now, like it's not that difficult. There's a lot of tiny companies on the NASDAQ that, need a pivot or they're, on death's doorstep. Um, there's lots of ways to do this and we can make it happen. So I'm not committing to a timeline, but I'll just say that it's not hard. So Ram, there you go.
Yeah, all that we've been through, pretty confident saying we know how to hypothetically speed run the DAT going to market.
It's a hard process for somebody that's never done it. You got to look at things like, shareholder votes and the structuring and, NASDAQ approval. And there's a whole bunch of stuff. But once you've done it a couple times, you know what to do.
Cool. Yeah, thanks for the question, Ram. Appreciate it. Let's see, we've got Joe, Mr. Accord, who's requested to come on up. Just approved him. Joe, did that go through? Are you getting that? Sorry, Twitter's been rugging me. Oh, perfect. Great.
Yes, thank you. Yeah, so well, my question is about where you think like who your ideal customer is for your stablecoin. And I'll explain the question a bit. So like I think one thing that's been interesting about the past week is um I'm seeing like in real time, even just the last couple of days especially, uh users balkanize themselves into very, very clearly distinct type of stablecoin users or customers or however you want to label them. Between USDT and USDC, and it's largely based on their opinions about the way that the drift protocol theft was handled. And so obviously the people who are of more of a DeFi mindset and like the fact that Tether stepped in prefer the USDT product. And then the people who don't care about that and maybe more thinking about TradFi uses prefer USDC, it seems, right? So that's like one fine area or spectrum, right? You have people who are more TradFi minded, that's one customer group. You have people who are more DeFi minded, that's another customer group. And I see themselves kind of sorting themselves along those lines with this sort of like as a wedge issue. And that will probably like be a long-term pattern well after people even are thinking about it, right? So my question is whether you want to use that binary or not, or you just have your own idea, like who do you see as your natural fit, just as these people are seeing themselves as a natural fit for one or the other?
It's a good question. I candidly think, speaking to the Tether Circle thing, I think it actually comes down more to just where the liquidity is. So, Tether really focused on kind of offshore, euro dollar type markets, people in emerging markets, the Asian derivatives exchanges. And so like if you're on Binance, like you're just going to use Tether. It's the most liquid stable there. Like it's just what you use. And that's just because it's there. When you do the sorts, the defaults, that kind of thing, like it's at the top. So that's just what you use. And you use it not because you have some philosophical belief that Tether is better than Circle. It's just like, it's just easy. It's there. Very few people actually think about their money in the same way that, us crypto nerds do. On the reverse, Circle, they were losing in that market. And so they really went in big on the DeFi side. And turns out DeFi actually is huge and is growing. And so if you're in DeFi, like you're just going to use USDC because that's what the pairings are against. I mean, look, that's what Apyx is paired against. That's where the deepest liquidity is for borrowing. Like that's what everything else is paired against. So maybe you like Tether better, but like if you want to be in DeFi, you just use USDC and it just kind of is what it is, right? So I think, we've got some ideas on target audience, but I think ultimately it'll come down to the most liquid option. And the most liquid option, I think, will win unless there's like giant structural differences, right? I mean, like some people, sure, they use Athena or they use Sky or whatever, and because there's some differences, but like those are, much smaller than say Circle or Tether. So I think, we will win and take market share from, some of those big players, Circle, Tether, Athena, Sky, by being different enough and liquid enough for people to, make that jump. But in terms of like any of our competitors or even just like buying Stretch or Stretch X, STRCX natively, I think the reason that we're growing a lot faster than say STRCX is on chain is because like, well, there's liquidity here and there's not there. So, you just go with what's liquid. In terms of like who the, target audience is or like who this is maybe ideal for, I think there's probably two buckets, at least today. One bucket for APY USD and one bucket for APX USD. So the bucket for APY USD it's really simple. You hold dollars on chain and you want to generate a yield. And it's a savings account. Saylor calls it a bank account. But I would argue, are even a little better than just holding STRCX because we smooth out the volatility, right? The thing is still pegged to 1, even though we had the 1% drop post X dividend. We have some diversification. We have some over collateralization. We have some features that make it just really simple. Just throw it in your wallet, leave it alone. And, right now we're paying about a 13% yield, a little less. It'll probably be around there, roughly for the long term. We'll see, but double-digit yield just sitting in your wallet on autopilot, nice and easy. Don't have to worry about it. And if you ever want out, there's a little bit of an unlock period, but, savings accounts also kind of have some restrictions on them, right? So I think it's essentially, think of it like a yield-bearing savings account, a little more risk than a savings account, but that kind of idea. That's just for the average DeFi user, and increasingly it'll be for the average, centralized exchange user and even like fintech user. It'd be awesome if APY-USD was offered on, Robinhood and Revolut one day. And we're certainly, having those conversations. The other bucket of user is, I'd say, a little more professional, whether that's, prosumer or like actual fund or even institution. And this would be on the APX side. So a little less yield, and you certainly have to do more work for it. But there's lots of opportunities to generate yield on APX USD. In fact, right now you can go on Morpho. There's a number of yield opportunities there. There's some looping type things you can do there. You can, short the basket if you want, borrow and sell APX USD if you think, that we're going to depeg or something or whatever. You want to hedge risk. So APX USD is really like the kind of the prosumer asset, if you will. And there's a lot more you can do with it. It's definitely more liquid on chain. You can move it around. We're going to get it added in more places as a collateral asset, that kind of thing. But it takes, definitely active management. So if you want to be super active, there's certainly some benefits to holding it, the instant redemption, no lockup. That's the main one. Extra points in the early days, and then just the flexibility. Sometimes it actually pays more than APY USD. Certainly certain dislocated markets, making markets and liquidity. There was a kind of a bit of a drop the other day in the curve market, the APY APX curve market. And so if you were there, you had a bot, you could have scooped up some, sold some APX, bought some APY for cheap, and made like 100% APY, it's one little moment in time, but like annualized pretty good, return there for those that could scoop it. So point being, the pro traders, I think you're going to have a field day with all the opportunities to be had with APX USD, all the tranching, all the shorting, looping, all the different things you can do. So that's kind of how I think about the target customer base. APY USD is for the, the average consumer, and APX USD is for the prosumer and the professionals.
Great. Yeah. I think that's a very good informative answer. So I'd almost think of APY USD as like being, maybe not, maybe like a certificate of deposit, right? So you're getting as much yield as you can with a short-term time horizon, and it's not exactly the same as as a completely liquid thing, but it's about as high yield as you get while still being considered a generally liquid type of maybe asset position, however you want to phrase it. Yeah.
Yeah, I'd say so. I mean, look, there's certainly I don't want to like oversell here. There's certainly more risk with APY USD and with Stretch and these preferreds than a standard savings account. But I think that risk is like in 20 years time, I don't think these instruments are going to be risky because it's really just um yield or credit backed by Bitcoin and and eventually ETH and Sol once these come out. That inherently shouldn't be that risky. Like if you did a 1% leverage ratio, and I know these are more than that, but like in theory 1%, that's actually a lot less risky than a mortgage that's backed by a house that could drop in value, right? So I think long term Stretch and these other variable rates, very specifically variable rate, but variable rate non-convertible preferreds are, as safe as a savings account. Let's call it in 20 or 30 years. Maybe sooner. But right now, obviously they're not, and that's because they aren't well understood. And so and they're not fully adopted. And so what you have is a small, I know Stretch has been issuing a lot, but they're still, sub 10 billion. That's tiny in TradFi standards. And so it's still a relatively small group of holders of the instrument. And, panic can set in and everybody dumps, and that causes the price to move down. Right. So that's I would argue a short-term dislocation. I mean, you saw February 5th, what happened. It rebounded entirely in like 2 days after that. But, that type of thing can happen because you don't have trillions of dollars in capital behind this. But once you do, I think vol is going to come way down. I unfortunately think yields are going to come down too. Saylor said maybe long term it's more like an 8% instrument. I think it could even go lower than that. But yeah, I think in the short term, it is certainly more risky. And that's why you're able to get, 12%, 13%, maybe even more on some of these new ones. It's because it's not understood by the market. But I think it's a good bet to take, and one that, if you're an options trader, you're a vol trader, I think this is the case where implied vol is consistently higher than realized vol, or implicit vol or expected vol is consistently higher than realized vol. And so, I want to long or I want to short that implied vol all the way on this for like a decade because I think the market's going to misprice it for a long time. So, it doesn't mean that the vol is already zero today. I just think it's a lot less than the, TradFi normies are making it out to be, which is, oh, this is, like a junk bond and a preferred stock. And, like, I just think they don't understand what's being done here, what's going on here. And I think, to continue rambling, I think SETA has done a really good job of highlighting and Strive what the future could be. MicroStrategy, yeah, they've got the converts, they've got all the stuff. Cap structure is kind of messy. Strive's cap structure is really clean. It's just Bitcoin and SETA, and that's it. And sure, it's more levered, but like you can model that risk. And so SETA, while it's not a debt instrument, it's actually like the most senior instrument in the cap structure, or one of the most senior instruments in the cap structure. Maybe there's some little loans or something. And so I think that's probably the ultimate end state here. And maybe strategy, sure. Maybe they keep some of the converts. There's no reason really to retire them. Maybe they do some other debt instruments in the future. But if those things are, secured by 2% of their balance sheet or 5% of their balance sheet, you can essentially their rounding error, not worry about it. And then you just have a clean balance sheet of lots of Bitcoin backed by lots of Stretch, or rather lots of Stretch backed by even way more Bitcoin. At which point, it's not really a junk bond. It's really just a bond that trades on the NASDAQ. And actually, that right there is a pretty unique piece of innovation. All other bonds they're not accessible to retail. You got to buy them in blocks, units of 1,000 bonds, or 1,000 units. And really, they don't trade anything less than like $100,000 worth. So the ETF was the, kind of the democratization wrapper for bonds, but bonds are not a product that retail can get access to. But retail is increasingly becoming the majority of trading activity in the market. Everyday people, they don't trust the institutions to trade their money for them. They want to do it themselves. And so Stretch is think of it like a tradable bond if you want, in a scenario where it's basically the most senior instrument in the cap structure and everything else is de minimis. It's no different than him issuing a variable rate perpetual bond, except everyone can trade it and it's got a price that trades, every day. So I don't know. I super bullish on what they're doing. I think a lot of DATs are going to issue these preferred instruments, and I think it's going to revolutionize credit markets, and it's going to be the next catalyst for Bitcoin, and it's going to be why Bitcoin hits $1 million a coin. And we're here to kind of port that from NASDAQ to the on-chain world, which I think ultimately could be bigger in the near term, or fairly near term, than NASDAQ, and certainly long term. Obviously, I think on-chain DeFi is going to flip TradFi, but might take a little longer. So anyways, ramble over.
Oh, gotcha. I like the detail. So yeah, thanks, Parker.
Sure. Thanks, Joe.
Cool. Thanks for coming on up, Joe. Sorry to keep you waiting. We got another one, Revenge Long, who's back again. I think he came on in a few weeks ago, if I recall correctly. Or Revenge Longer. Sorry, misspoke there. Revenge, just approved for you to speak. Feel free to ask away.
I still see him as a listener.
Man, let me invite him. And Twitter has really been rugging me when it comes to these spaces. I just sent the invite for him to come on up. Revenge, feel free to throw up an emoji if you're still there. No, I know you requested to speak a while ago. I'm cool. Well, we're waiting for that. Yeah, sorry, go ahead.
I was gonna say, there's some discussion in Discord about the peg mechanism and all of that. So happy to jump in on that a little bit.
Yeah, yeah, please. That would be good. There were some people, I think, asking in light of other developments this morning in the market. So
yeah,
feel free to go ahead.
So maybe taking a step back. We designed Apyx to be a managed solution. We didn't want to just basically tokenize Stretch and put it on chain. That's silly. Xstocks already does that. And we've actually already put a bunch of our treasury into Xstocks. So just tokenizing it doesn't really do anything. It's been here for a while. People can use it, should use it if they want it. So we wanted to build a managed product around it. And that's what we built with Apyx, right? It's a diversified basket. It is a yield product. It is not a stretch product. And so basically we built it as a managed product. And a couple things that go into that. Obviously, we hold some cash, which helps to dampen the volatility. We hold some SATA, and we're going to diversify into other preferreds that do fit the bill. And we have a risk management framework, and it's focused on volatility and liquidity and all of that. And then we also have over collateralization, and we're going to try to continue to grow that by peeling off some of the yield. But we really want a set it and forget it product for most people. They don't have to be managing positions, dealing with, the return on capital taxation piece. They don't have to be dealing with, ex-dividend dates and all this stuff. And, the volatility that comes around ex-dividend. It's just buy the thing, set it and forget it. We'll manage it, and we'll make sure there's a smooth yield experience. There's some other products in the market that, they don't have that. It's just stretch or SATA or whatever, and you get what you get, and you get the good and you get the bad. And that's fine. Those are great products. You can go use them if you want, but you should understand what you're getting. And it definitely requires a little more active management. And so our product is really designed to have reduced volatility and potentially greater yield than, say, Stretch. I mean, right now, again, we're paying out about 13%. Stretch pays 11.5%, so we get a little extra yield there, a little lower vol. That's great. That's the holy grail. So just some comments, some thoughts there. We structurally have a different product than, say, an STRCX or, anyone else. Revenge. Oh, it looks like you were up and then went back to listener.
Yeah, I just sent him the request to come on up and speak again. Let's see if it goes through.
Elon's distracted with his robots and leaving his communication platform to die.
He's jealous of strategy outperforming Tesla. Revenge just sent another request. Feel free to come on up. I guess in the interim, one thing I did want to highlight, and this week too, that we announced, which is pretty exciting, is APY USD unlock period has been reduced from 30 days to 20 days. So giving the opportunity for market participants to have a little bit more flexibility in terms of getting the yield and being able to move accordingly, which is great. And with that said, I think Revenge has been enabled to speak. Revenge, you there?
Yeah, can you hear me?
Yep.
Oh, you can. Beautiful. Yeah, sorry about that. Getting smoked by Twitter. But yeah, I had a question on the DAT side of things, right? So we've seen the sector really get beaten down ever since like the Q3, Q4 kind of boom bust cycle. And there's really only like, two DATs of consequence left with any sort of premium aside from the market in Strategy and Bitmine. And so my question is, if you guys were to go out and try and raise a pipe and do a NASDAQ deal, do you think there's demand out there for a pipe to begin with? And then if you can, raise the funds for this, is your goal to be like, hypothetically, is the goal to accumulate, the Gov token of, Apyx, or are you guys trying to run kind of a similar strategy to like the Strives of the world pwhere you take, your pipe cash and you invest it in the STRCs or the SATAs of the world and run like a pseudo levered, like preferred equity ETF with like, some governance token sweetener in there? I'm just interested in the strategy on what you would actually do there for a debt if you were to put one together.
Yeah, that's a good question. I think hypothetically speaking, the ideal situation for an Apyx DAT would be essentially a way to get public market exposure to Apyx. So all of these, TradFi hedge funds, people who want to buy in their, IRAs, brokerage accounts, maybe they love the stablecoin narrative of Circle. Circle's fantastic, but like maybe they want something a little different, as well, diversifier, then they could just buy, the Apyx DAT and get exposure to the whole Apyx ecosystem. So I think that would be kind of the holy grail. Maybe that DAT would also then issue its own preferred to lever a little bit, way down the line. Obviously, you need a certain corpus of equity capital to for a preferred to make sense, because you can't have $100,000 of preferred in the market. Like NASDAQ won't let you issue that, and it's not going to be traded anyways. So, that'd probably be a ways off from well, it depends, it depends on how big governance token gets, but assuming, it's some kind of reasonable growth timeline, the, Apyx DAT's probably not going to be like $1 billion on day one, right? So, but I think, long term, the idea would be, yeah, maybe it does have a pref on it, and it's effectively a way for public markets, U.S. equity markets, to get access to this interesting stablecoin community ecosystem platform, even without having to go open a Coinbase account or a Kraken account and like buy the thing. Because as much as people are excited about like TradFi moving on chain, like the vast majority of TradFi investors, they're never going to leave their prime broker. I mean, look, it was this week, today, that Schwab announced that they're finally adding Bitcoin and Ether, just those two trading. I mean, we're so far away from native assets like an Apyx being available on, Pershing's prime brokerage platform for, Millennium to trade directly. Like, that's just forever away. And so having a DAT that gives that exposure, perfect. It plugs into the, the framework of TradFi. The other like unsung benefit is options markets. So you get really liquid options markets day one. The massive options market makers start trading right away, or providing liquidity right away. And so if there was an Apyx DAT, obviously if you want to trade options on Apyx, the governance token, like, absolute best way to do it is, NASDAQ listed options. So in terms of pulling it off, I mean, and your comment about, DATs being kind of dead, totally hear you there. I think that's just a function of where we are in the cycle. When MicroStrategy went through their first bear market, they were completely dead. And candidly, I mean, yeah, Bitmine's great and all, but like, they've not really been running the ATM either, to my knowledge. So it's kind of a, DATs are a bull market vehicle. In a bear market, most DAT operators sit on their hands, hang out. Obviously Strategy hasn't. They've created a new instrument. Obviously we haven't on the DFDV side. We helped launch a new project. But I think as soon as bull market comes back, everyone's going to forget. Everyone's going to be piling back in. Yeah, maybe it's not pipes. Maybe it's like registered deals. Maybe they're smaller deals, but like, I don't think the DAT phenomenon is going away because of what it structurally offers investors. But the other thing to highlight is, you don't have to raise a giant pipe to get a DAT going. There were some this summer that were largely in-kind deals. So existing token holders would basically swap tokens for shares in the new thing. So we wouldn't necessarily, or whoever launches one, wouldn't necessarily have to go out and convince a bunch of funds to put in $100 million in a pipe to get the Apyx DAT off the ground. It could be convincing, 2 or 3 large existing APYX holders to do a swap. And then, yeah, you got to do like a NASDAQ shareholder vote and everything. But all of those, from what I can tell, went through this past summer. So, I'm sure that could be done. So again, hypothetically speaking, I think it's actually not that hard to do.
Yeah, I don't disagree. I was looking at it more of the perspective where we saw, significant number of these DATs raised for tokens that had, call it a dozen or so venture interests in them with, quite a bit of like bag to unload. And it was kind of like, a transfer of value from, crypto markets to pub markets. And Apex is in a kind of a different situation, right? Where if there were a DAT launched in like the, third or fourth quarter of this year, you're kind of looking at a team with, essentially no overhang from like a venture investing cohort or, 27 seasons of like points farming to the point where you don't need a pipe of consequence to have like a pretty significant or like outsized impact on the float there. That's kind of what I was pointing towards on that side. But
That's
then,
right. Yeah, I mean, yeah, you've done your homework for sure. I think it would be about distribution. I mean, look, it'd be great. Like the foundation has a big block. It'd be great for the foundation to be able to sell some because foundation could use that to further shore up the over collateralization on the protocol. So that would just, reduce volatility even further, make it more attractive overall. But ultimately, I think it's about access, and it's, less of a push maybe and more of a pull. So rather than, investors of ours saying, hey, look, like we need liquidity. We're not getting liquidity in the crypto markets. Let's see if we can get liquidity in, TradFi markets. I think this is and that candidly, that's all IPOs, right? I mean, the Circle investors were like, hey, we're not getting liquidity in the secondaries. Like we want it in public markets. Same with, OpenAI investors, whatever. But I think for us, it's hey, we think that a stablecoin, effectively a stablecoin company, which is what this DAT would be, and there has to be an operating company in it too. So it wouldn't just exclusively hold governance tokens. Maybe it would like operate, some governance features, or it would, I don't know, it would do something with those tokens, right? It has to be an operating company. So ultimately a second, much smaller yield bearing stablecoin company listed on the NASDAQ is pretty cool. Like, hey, Circle trades at, whatever multiples, but they're, really expensive. They don't pay yield. Are they going to be able to 10x their growth, their TVL, in a short amount of time? I don't know. Some people may want to take the much smaller bet. And right now there's no other bet. Like if you want to bet on stablecoins, you literally just bet on Circle. If we can get this into the market, I think there'd be a lot of demand for it.
yeah, definitely. And that's sorry, one last question, if you don't mind.
Sure.
In regards to demand, right? So obviously, like Stretch running 1.5 yards on its last day prior to XDiv, demand there is like pretty obvious, right? It's whether it's the preferred ETFs or, people really like Sailor's commercials on Twitter for it. I'm not sure what exactly is the main driver there, but on the on-chain side of things, right? You guys are growing at a pretty decent clip here, coming up on, looking like 200 million by, mid-month next month here. And I'm wondering, where does the next like 100 million come from in this case? Because I think you have like this cohort of relatively astute farmers who have stepped in early that, both understand Stretch and understand DeFi. There's like much lower crossover between like Stretch enjoyers and like crypto native folks than I think people realize. So I'm wondering, where does the next like 50 to 100 million of demand come from into Apex or, just into on-chain Stretch, whether that's like StretchX or like whatever it might be? Where do you see that coming from?
Yeah, I think it's I just think of it as like concentric circles of crypto expertise, right? So right now it's like this tiny, tiny niche in the Venn diagram of like hardcore crypto farmers that are still here and also understand Stretch. And we talked to a lot of people that like don't understand Stretch and they're like, oh, this thing's going to zero. Like this is a scam. And I'm like, you're in crypto. How do you not understand this? So it's admittedly a pretty small group. And actually, interestingly, we were looking at the numbers today. There's about 2,000 unique holders of APX USD. And so based on our total supply, that's about $80,000 a wallet average, right? And there's some larger ones, sure. So the median, I don't know what the median is, but the median's not like $100 or $1,000. So I think it's an education game. I think it's a safety game, but ultimately it's a distribution game. So it's the yield aggregation platforms, it's the curators, it's the um, lending platforms, the centralized lending platforms, it's the centralized exchanges that have earned programs, it's the wallets, it's all of these guys. And they want to see a project be out there for a month, 2 months, 3 months. They want to see your PCAOB attestations, which we got up this week. They want to see your accountable dashboard, which fingers crossed we'll have out Monday. They want to see, how you handle some market dislocation. They want to see a lot of things, and time, honestly, is the biggest thing. So as we're coming up on some of those time milestones, those TVL milestones, I think it really starts to accelerate. We're supported on BitGo as a custodian, but let's say Anchorage adds us as a custodian. Let's say Coinbase adds us as a custodian. Let's say these others add us. Let's say the OTC desks start trading it, so that if I talked to a fund today and they want to get access, but they maybe aren't trading on chain, and so I'm like, well, you could go beg the BitGo OTC desk to print you an order, but so I think it's, just the distribution. And, we've got a bunch of conversations going right now, a couple that have committed to, launching maybe next week. We'll have some announcements, and I think it really starts to just snowball. And that's just our experience. We've seen that where, we talked to a lot of curators on day one, and they're like, come back when you're 100. And now we're getting inbound from curators, and we're getting inbound from exchanges, and inbound from platforms that are like, hey, we want to get involved. Like, we want to support it. What do we need to do? How do we KYC? All these things. And so I think it really starts to snowball. And hopefully next week, you'll see the first of these kind of, distribution platforms, these yield aggregators, these exchanges, whatever. And then from there, it'll be the top of every yield bearing opportunity at, on any crypto platform. Let's call that in the next 2 months would be the goal. And that's, probably not the next 50. That's the next 500 to $1 billion in TVL or more. There's a lot of TVL floating around the space, especially if we go into a bull market, maybe multiple billions. And then the next concentric circle from there, I know you didn't ask, but is the TradFi crossovers. It's the Cash Apps, it's the Revoluts, it's the Robinhoods, the Trade Republics, the Line, finance app, and all of these. Because ultimately, a 13% yield, or maybe it comes down a little bit, but a 13% very low vol yield product, like, everyone should want that. That's not just a crypto native, like, degen farmer thing. That's like my grandma would want that. And yeah, maybe we should structure a little differently, a little lower risk, but like even an 8% very low risk yield products, every human being, all 7 billion people on the planet should want access to that. Like, it's just a question. Do you like money? So ultimately that's what we're going for. We want some APY USD on the balance sheet of all 7 billion people on the planet. We want to flip Tether. And we think we have a better product than them. So that's kind of what we're going for.
I think the other thing I just want to add real quick too is, from our vantage point, it's still not quite yet, and maybe this is a silly take, it's still not quite yet consensus that the only narrative in crypto right now is digital credit and, on-chain digital credit yield to a degree. So I think, to add on to Parker's point, and he kind of touched on it, right? Like, as that starts to become more consensus, as people become more educated, as it becomes more apparent that maybe a Bitcoin bottom is in, at least for the next 12 to 24 months, I think you start to see people really warm up, and, TVL can come that way. And, we've been talking internally too, like, I'm sure whenever the Apyx governance token comes out, assuming the narrative is still intact and the trend is still up and to the right, like, presumably we'll see people want to speculate on the governance token as well. So in a lot of ways, we feel like we're on the front of the rocket ship taking off At least that's the hope.
Cool. I
Yeah, it kind of
appreciate it.
sure. Great questions.
Yeah, thanks for coming back, Revenge. I know this was your second time coming up, so I appreciate it. And let us know if you
Yeah.
have any others.
Yeah. Well, lastly, you guys have Sailor on next week, right?
Next Monday. Yep.
Very cool. Looking forward to that, and interested to see what his take is on. He's never been a crypto guy. He's always obviously like no second best. So interested to his take on kind of the first crypto native product here. So looking forward to it.
Yeah, I think he
That makes two of us.
we talked to Sailor back in May, right after we launched DFTV. And he was like, had all sorts of great advice and was very encouraging and, cheerleading for us. And I was kind of surprised. And I think ultimately Sailor, he likes money and he's what I would call a Bitcoin realist. And he, tapped into the last bear market, this like no second best meme where he was able to get all the the hardcore Bitcoiners on his side by basically shitting on everything else. But I think that was a means to an end. Hopefully I'm not outing him or something, and just my personal belief. But I think he's a money maximalist and he's not building this business because he loves Bitcoin and he thinks like, Satoshi's a cool guy. I think he's building this business because, he wants to be the second trillionaire behind Elon. And this is just the best vehicle to do it. And Bitcoin is fantastic, but you don't have to like love the code specifically or have some religious belief about it. You just look at it economically. So I think now he sees, the crypto angle as a distribution mechanism for his, his offerings. So now he's a champion for it. And it, means to an end kind of thing.
Right on.
Anyways. All right.
Cool. And
Anybody else or should we wrap?
yeah, I don't know if anyone has any other questions. If you do, throw your hand up, an emoji, we can bring you on up. I'm taking a look. Just going through Twitter and Discord real quick. I don't think I see any other questions. But again, if anyone in the audience has something, throw up an emoji. We'll bring you on up. I guess the one other thing to hit on too, I mean, a few other things, but this week we did publish a piece too on our blog. Highly recommend people head on over and check it out, entitled Apyx Protocol Security, How We Protect Our Users. Just in light of recent market developments, we wanted to give market participants and users just a little bit more of a rundown as to what are some of the things we do from a security standpoint to ensure the protocol remains secure. I know we had some questions last week, so we wanted to publish something this week to give a little bit more of a look into things, to maybe address some concerns that folks might have. And of course, also the other major milestone this week, we surpassed 1 million stretch holdings, and we're excited for the second million to follow. Not too long from today, at least that's what we're expecting.
Yeah, and on the security point, I kind of talk a little bit about our philosophy there. We came from Kraken. Joseph, he was at Kraken back in 2013. I distinctly remember, so he was around for Mt. Gox. John had a Mt. Gox account. I distinctly remember the whole shoot, what was the Canadian exchange? It was like in 2019.
Quadrex or Quadrigex or what was it?
Quadrigex. Yeah, I distinctly remember that. And like Christina, in the Kraken Slack was like posting about the bounty that Kraken was doing. And so like I think if you spent any time at Kraken, you have this deep sense of appreciation for security, and it kind of goes beyond the the standard, like, oh, here's the 5 boxes you check. And so some examples I can give from Kraken. I remember we would do these, like, meet random people in the company chats once a month, and they just like would randomly pair you up because Kraken has like lots of employees. And so I remember meeting with this guy one time. I was like, "Oh, what do you do?" And he was like, "Oh, I work on the Linux kernels." Like, what are you talking about? And apparently all of like our key management servers had custom built Linux kernels. Um, and so that's how serious Kraken takes security. Now, I'm not saying we like, run custom built Linux kernels here, but um, in fact, I think on the Kraken side, I think sometimes Kraken's slowness to execute and why, maybe Coinbase and Binance, some of these others have kind of out executed is partly due to that kind of hyper paranoia on the security front. And so we apply some of those same things here. Most of the team, our CTO is ex Kraken, was at Kraken for like 8 years as well. So we do things like manual time locks on every single admin function, or sorry, time locks on every single admin function, including minting. So when people come to us, hey, can I KYC? I want to mint. It's like, well, it's a manual process. So we're only doing it, weekdays, um, during business hours. And there's a time delay on that. And so it creates operational overhead. It's annoying. Everything's multi-sig. We don't have a single signal wallet anywhere in the stack at all. But it's just like hyper precautionary. And if we can apply those principles that we take from Kraken, and yeah, maybe it slows us down a little bit, but looking at Drift or looking at Resolve, they built up everything. And then in one day, Rome burned in a day, right? And so if we go a little bit slower, but are hyper precautionary and do way more than the security experts would, recommend, we think that we can build a longer term business that, mitigates as much as possible that tail risk of a breach happening. Because it only takes, one slip up. And so you don't ever want a scenario, you don't ever want a security infrastructure that is vulnerable to one slip up. You want as many layers and safeguards in place such that, doesn't matter if you have one or even two like breakages or issues or something go wrong, you've got so many fail safes in place that, you don't have a problem. So as they say in the U.S. Army, 1 is none, 2 is 1. We'd think 20 is the best way to go.
Yeah, thanks for giving the detailed overview. I wish one of the competitive advantages could, for people like, assessing projects, to be like, oh, this was a group of previous employees at an exchange where you're indoctrinated with all sorts of security measures, because that is very much us. I mean, like, we're max paranoid. Of course, it doesn't mean, you can't just fall victim to human error or whatever, but yeah, we've got a lot in place to ensure a drift doesn't happen to Apyx, but I think everyone gets the point. Terrific. Any last questions? We'll give one more opportunity for folks to come on up and ask. Feel free to throw your hand up. If not, we can close out. I think, it's funny, the week's almost over here. We're setting one last record. Longest weekly office hours to date. Very bullish.
Yeah. This is a good one. We'll definitely do it next week, and hopefully more people bring questions.
More questions, more announcements, more updates. Next week's going to be big. I'm looking forward to it. With that said,
Yep,
go ahead.
I was going to say, just saw a signal message come across. I think next week's going to be really big.
Yes, agreed. I'm excited. Cool. With that said, thanks everyone for coming on through. Thanks to our speakers for coming on up and asking questions. Again, if you have any questions, comments, or concerns, don't hesitate to jump in the Discord or send us a DM. We're open to any and all constructive criticism, so send it our way. Until then, we'll catch you next week. Take care. Have a great weekend, everyone.
See y'all.